This is Notorious POD, the podcast for the best informed people in the real estate industry. Rob Hahn is your host, and Notorious is where the real estate industry comes for real talk with no bullshit.
Hey everybody, and welcome to an episode of Musings. I didn't really record one this week because I've been traveling and been really busy. So I figured, what the hell, I'll try and get one up on Friday. I know a new episode is hitting Monday as well. And it's a very short topic, I think, at least it should be. And it stems from a conversation I had when I was over in San Antonio for NARPM. And, after my presentation, I had a really cool conversation with a young man, very smart, just talking about like crypto. Because, as we got to talking, I told him I'm, very interested in it and, really kind of did a deep dive into crypto and blockchain and real estate and all these things. And the context really was in my presentations, I've said on Musings, as I've written from really for the last couple of years, that I don't believe what we have is a hot sort of housing market. I don't think home prices have gone up. I actually think what's happened is that the dollar's been devalued because of excessive money printing by the Fed. And, inflation's now like 8%, nominal. Probably real inflation is closer to 15, 16%, maybe more. Home prices are going up 19.1%. It was the latest print. Gas prices, food prices, everything's going nuts. So what it came to then was, all right, let's say you believe that. Let's say you think that the dollar is a problem and you don't want to have cash. You don't want to have bonds, right? Because bonds are all, doing negative yield, right? So, what that means is if bonds are paying, let's say 5%, but inflation's 8%, then you're guaranteed to lose 3% of purchasing power every year. So the question is, where should investors, where should people who have some money, where should they put it? And real estate is an obvious topic, especially when you're at a place like NARPM, because they're property managers. So their customers, their clients typically are landlords. They are owners who own real estate as an asset, not as just a place to live. They're literally renting them out. So we went through a couple of things, and it turns out there's three main assets that I think people are looking at. And it's real estate, it's gold, and it's crypto. But there's some interesting sort of things there, and I just thought it'd be fun to talk about it. So first, real estate. Clearly, real estate is an amazing inflation hedge asset. If you're listening to this, Chancellor, you're in the real estate industry, you understand just how valuable, how important this is. Most of wealth creation over the last 40, 50 years has actually been around real estate, specifically ownership of a primary residence. So if you look at, all kinds of studies, if you look at all kinds of charts, all kinds of stats, what it shows is most of the wealth of Americans, at least, comes from the fact that they own a home. They're homeowners, and their home values have done this, because wages have stayed flat or actually gone down a little bit. So that's an obvious one. But from an investment standpoint, there are some pros and cons. The pro is it's physical. It's something that you can actually touch. It exists in the real world. And when you own it, the big advantage, the major advantage of real estate is that it generates income, right? Especially if you're renting it out. There aren't that many assets actually in the world that generate that type of cash flow income as real estate does, while also appreciating, the asset itself is appreciating. So that's the big advantage of real estate. Why I think it makes a ton of sense for, people who are kind of in a certain financial position, to start really investing in real estate. The big downside of real estate, though, is lack of liquidity, right? Meaning, if you're a trader, I guess if you're a hedge fund, if you're a private equity fund, then yeah, it makes a ton of sense to park cash in real estate. And I think that's a big part of the story of this crazy market we're in, that there's a rotation of capital out of things like stocks and bonds into real estate. The downside of real estate, though, if you are one of those, if you're not just like buying and holding, if you're not buying a home to live in, is the fact that it's really not a liquid asset, right? It takes a long time Like say you say, okay, you know what? I see a better opportunity. I want to sell my real estate holdings and put money over there. It takes a long time and it's very expensive, right? In the United States, I think the average commission rate now is like 5.5%, not to mention all of the other fees and all the other costs. So, depending on who you ask, the total transaction cost could be, as high as 9-10%. That's a pretty steep price to pay, for moving in and out of assets. Let's put it that way. So the huge advantage, income producing, inflation hedge. Huge disadvantage, lack of liquidity. So that's where you get into the other two. Gold. Gold is an amazing inflation hedge. It's probably like the inflation hedge, right? So you go talk to gold bugs, you go talk to gold investors. That's kind of what they'll say, right? It's like money is worthless. Their fiat currency is broken. Gold is the only real money. You should buy gold. The advantage of gold, and I own a little bit of gold, not a whole lot, as we'll explain. The advantage of gold is that it is historical sort of precedence. Gold has been money for as long as human beings have, at least in, the most of the developed world, have had commerce, right? Like really up until 1940s with Bretton Woods, all of the world's currencies were pegged to the gold. They were gold backed, right? The dollar, the Swiss franc, the pound sterling, everything was convertible to gold. Like you could take your dollar to the bank and they would have to give you gold in equivalent value. So, we're talking thousands and thousands of years of history of human beings using gold as money. So that is its big advantage. The other big advantage is that it's like a bearer asset, meaning money like US dollar is actually a liability of the Federal Reserve. Any other stocks, bonds, they're liability. They're somebody else's liability. Like your asset is someone else's liability. And if that someone else goes out of business, so bank accounts are a great example of this. This is why we have the FDIC, right? Because it used to be I deposit my money into this bank. The bank says, okay, you have $10,000 in deposit with us. That's a liability of the bank. If the bank goes out of business, then I no longer have my $10,000 in assets. It's a huge weakness if you care really about sort of preservation, right? Whereas gold, if you have gold, physical gold, then you have physical gold. Like nobody sustained business for your gold to be worth something. It just is. So that's the other, sort of huge benefit. The negatives, the downside of gold is that it's heavy, and it's heavy and it's physical item, and there are some security risks around that. Like, say I have a safe and I at home or in the bank or whatever, and I have a safe deposit box and I put my gold bullion there. Somebody breaks in, takes my gold bullion, then guess what? I no longer have gold bullion. I can't get it back. They have my gold. They've taken my money. All right. Real estate can't be stolen. Not like that. Like the government would have to come in and steal it from you, like eviction, eminent domain, whatever. But like a robber cannot come and take your land like while you're sleeping. You know what I mean? Like it doesn't move. So that's one of the things with gold is like whoever has it. And that results in lots of security issues. And of course, it's really heavy and it's very expensive to transport. So one of the issues is if you are thinking that gold is going to be used as money, which is fine, but there's a reason why the fiat system, why the gold-backed currency system came into existence historically, because let's say you're buying something from China and you got to ship them gold to pay for it. That's an expensive proposition. Not just in like how heavy it is to move. You need wagons, you need trains, you need ships, but security, because whoever has it has it. So you have to have armed guards, etc. So that's the sort of downside of gold. But it's a very popular sort of investment because it has thousands and thousands of years of history of having value, and it is what it is. So that brings us to crypto. Here, I do want to say that it's important to understand, if you want to criticize it or if you want to get into it, either way, that there's a difference between crypto and Bitcoin. So I wrote an article about it. The very first article I wrote this year was trying to just explain, at least as I see it, the differences between all of these sort of new blockchain, crypto related stuff. Like they're not the same thing. Blockchain is not the same thing as crypto. Crypto is not the same thing as NFT. It's not the same thing as metaverse. So just because you think it's stupid that people are paying hundreds of thousands of millions of dollars for some Bored Ape NFT image doesn't mean that Bitcoin is stupid as well. Like they're different. So within crypto, I make a huge difference in my mind between Bitcoin and everything else. And as I said in the article, I think the way you got to think about it is Bitcoin is digital gold, right? It serves the same purpose that gold does, meaning its purpose is to exist, right? Because again, like gold, it's a bearer asset. Like if I have Bitcoin, I have Bitcoin. Period. End of story. It's not anybody else's liability. No business has to stay in business for my Bitcoin to exist and have value. It just is. Whereas other coins have value. So to me, things like Ethereum, Solana, Algorand, a lot of these other coins, they're really valuable. I mean, don't get me wrong. I own a lot of those. And the reason, though, is different. Those things have value because they power computing. Like Ethereum, its big thing was the virtual machine. The Ethereum network allows for smart contracts, which are basically little pieces of software code. So it allows for sort of distributed, decentralized computing. And Ethereum is necessary to power that whole network. Literally, it's called gas fees, right? So when I think of altcoins like Ethereum, Solana, some of these other things, I think of them as digital oil, right? So oil is really valuable. I mean, we're seeing that right now because, the world we're living through. But it's not valuable for the same reason that gold is valuable, right? Gold is valuable because it just exists, and humanity over thousands of years have just come to agree that this thing is valuable. Whereas oil is valuable because it actually powers things. Like you need it to power your car, airplane, ships, trains. It's energy. So that's kind of how I think about it. Altcoins are digital oil. Bitcoin is digital gold. So if you're going to invest in something as an inflation hedge specifically, I don't think you put it into altcoins. I don't think you go buy Ethereum. I don't think you go buy Solana. I think you go buy those things because you believe in the project. You believe in the network. You think that Ethereum EVM is going to take over sort of cloud computing, if you will, right? Then you buy Ethereum because, then it's going to go up in value. It's going to be more useful. It's just like buying, barrels of oil. Versus Bitcoin, you only buy Bitcoin if you think that the fiat currency system is going to reform. It's going to collapse and then reform. How is it going to reform? Well, your investment thesis has to be, we can't have governments just create money out of thin air. It has to be backed by something. And what we're betting on, the Bitcoin, sort of investors are betting on that in the future, and it could be 10 years out, it could be 20 years out, all currencies will be backed by Bitcoin instead of by gold or something else, because Bitcoin it has some major advantages over every other asset. And this is what like Michael Saylor's really, really big on, which is number one, the supply is totally fixed. There's 21 million Bitcoin forever and no more. That's it. That's written into the code. And the code can't be altered or modified without controlling the entire, it's all levels of detail. So that's one huge thing. Even gold, because gold miners are out there digging up more gold every year, the supply of gold increases by like 2 to 3% a year, roughly. So there's inflation of 2 to 3%. Bitcoin, there's zero inflation. It's not possible, right? So that's a huge advantage. Two, the biggest advantage, though, the real big advantage, is that it's digital, which means you can send it. So instead of having to hire armed guards and whatever trains and ships to ship your gold to whoever you're buying land or cattle from, you just click a button and digitally send the Bitcoin, and there you go, the trade is settled. So those are sort of the positives and why the Bitcoiners are bullish on it. The negative of Bitcoin, obviously, is that it's brand new and it's just computer code. Really, that's all it is. It's just digital bits, right? So it's not tangible. You can't touch it. You can't hold Bitcoin in your hand, right? You can hold a wallet a cold wallet that contains Bitcoin, but you can't, it's not like gold. And the other one is just, it's so brand new. So the vast majority of people, especially people kind of my age and older, right? I'm 50, I'm a Gen X. The vast majority of people have a real difficult time wrapping their head around the idea that some digital bits, ones and zeros, can serve as money, that it can have value. To discuss that, you have to get into this whole sort of discussion around what is money and the purpose of money and the role of money. And this is not the place. But I will say this: if you're interested, who's done a really, really great job of kind of laying that out, I think is Robert Breedlove on YouTube and Seyfuddin Ammous also on YouTube. They go in some real depth, like historical depth and principles and all this about what is money and function of money. I would go check those guys out. But that's, if we're going to be honest with it, that's one of the big negatives. So I think the people who are in Bitcoin we have a thesis, right, that has to do with the collapse of the global monetary system and it being replaced by something that's backed by some sort of fixed asset, some sort of real thing, maybe not real is the wrong word. And I think most people think it's going to be gold. Like we will go back to the gold standard as we did, as the world sort of worked, prior to 1948, I believe it is. Whereas we're betting that we're going to go forward, right? Because going back to the gold standard is going back, right? It's historical. We think given technology, we're going to go forward and be backed by Bitcoin, right? So I think most of us, our investment thesis is not that we're going to start buying chickens and milk with Bitcoin. And again, I know that there are people who think that, especially like folks who really believe in things like the Lightning Network, paying Satoshis. I think most of us think that we think the dollar will be around, Deutschmark will be around. The currencies will be around because they're really useful for trading, right? For going to the grocery store and buying some chicken, like I'm used to thinking of things in terms of US dollars. Oh, that chicken is $3. Wow, that's really expensive. That chicken is whatever, right? We're not used to thinking of things in terms of Bitcoin, right? And I think it's going to take a while before we get to that sort of thing. So I think instead what our belief is that the dollars will exist, the currency will exist, but it will be backed by and linked to Bitcoin. And that's why we invest in it. That's why we hold it. Anyway, like obviously I'm not a financial advisor, none of this financial advice. But I just thought it's interesting to look at the three sort of major asset categories. And there are others. I have a friend who's really heavy into commodities, right? But I don't think he's like doing commodities as a buy and hold. I think he's doing it as a trader. Like, wow, I think commodity prices are going to go sky high because all this inflation and, troubles of the world. So I'm going to go buy some copper. I'm going to go buy some lithium, some oil, whatever, hold on to it for 6 months and then, buy low, sell high. I don't think commodities investors are actually investors. I think they're commodity traders. Whereas real estate, gold, and Bitcoin are investors. They're buying it and they're holding it for a long time as sort of a store of wealth. And those are the three main categories. Real estate, it generates income. That's its big plus. Its big downside is not liquid or not as liquid. Gold, its big upside is historical sort of history, I guess. I mean, it's been money for thousands of years, and it's much more liquid than real estate. The downside is it's heavy, and there's some security costs that are involved with gold. Bitcoin, the huge disadvantage that it's not real, right? You can't hold it. But its advantage is it's digital, it's instant, it's totally supply fixed, and it's pure money. It has no other use, unlike, let's say, other cryptos that have a use. Anyway, I don't know if this is useful to anybody, but I thought it was interesting. And as this young man and I were talking, he seemed to appreciate kind of the way I thought about it. And I just thought, all right, then let's take 20 minutes and muse on this topic. So, hey, if you found this valuable, I'm trying to get up to 1,000 subscribers so I could actually name my YouTube channel. If you're not on YouTube, please come visit YouTube and search for me, Notorious ROB, Notorious POD, and click subscribe, just because I would like to get a name. If you're already on YouTube, please consider subscribing so I could name this channel. Thanks, everybody. Talk to you later. Bye.